What is the property cycle? Before we answer that, it pays to have some background because there's a more common question I've been asked over and over again during my many years involved in property investment. It's a question about timing, not clock timing, but specifically the question, is now a good time to invest in property? And I have long held the opinion that now is always a good time to buy the right property at the right price. However, the persistence of this timing question back in the 1990s when I was working at a corporate bank led me to question whether there were optimum times to buy, or perhaps optimum times to use specific property investment strategies. I had observed as a property investor myself what appeared to be cyclically changing tides in the property market over the years that affected the value of my property portfolio and my clients' property portfolios. Sometimes there was rapid and sustained property value growth, other times sustained periods of flat or even falling values. These observations ignited a few burning questions within me like, is there a property cycle? And if so, is it measurable? And if it's measurable, could it possibly be predictable to any degree? Now at the time, in the mid-1990s, the internet had just arrived and a quick Netscape search revealed virtually no information about the topic of the property cycle. This led to my lengthy study of whether a property cycle actually existed. Initially, though, I was full of doubt and thought if a property cycle existed and could be predicted, surely the secret would be out. Now, I was working in the finance industry and fully aware of the business cycle, but no one seemed to be able to answer my question of whether the property market had its own cycle. After several years research, to my surprise, I found enough evidence to conclude the property cycle clearly does exist. It even has some immutable aspects, is measurable and surprisingly quite predictable once you've got the right view and information. I also discovered the reasons why so many people do not use the cycle to their advantage. You see, the insights property cycles offer us are only visible through the lens of the appropriate research and close analysis without any bias. So, okay, let's now answer the original question. What is the property cycle? The property cycle is a succession of similar, yet often seemingly very different, events that impact the property market on a cyclical basis. By understanding property cycles, we gain insights into why the property market reacts the way it does and why emotion has such a big impact on our property investment decisions. Property cycles don't repeat precisely, but more often than not, they do rhyme with other previous cycles. By learning from studying historic cycles, we can become empowered to look beyond the emotive daily views and misperceptions often expressed in the media and use the property cycle to our financial advantage to achieve significant accelerations in property wealth. We can also discover which investment strategies are cyclically appropriate and likely to produce better results during specific phases of the cycle. As you complete the lessons in this course, you will learn how to harness the power of the property cycle.